later in the morning, you're going to hear from a gentleman named Joe DiNapoli. Joe DiNapoli, for those of you who don't know him, trained me in early 80s. So a lot of people have probably heard of Fibonacci analysis, may not really know how it works. And this gentleman was an engineer and designed the Fibonacci analysis for the stock markets and took it to the, basically took it to the world. So this has created a trading revolution. This trading revolution now is to a point where the independent trader, sitting at their home or their office or their laptop, wherever they might be, now has the same tools that only used to be available to the professional on Wall Street. I want to tell you a little bit about me because I think it's important that when somebody speaks to you, they've earned the right to speak. When I tell you some chart patterns that you're going to see today, I have traded those chart patterns probably 100,000 times. Okay, welcome back. As I told you when I started my presentation, I spent a lot of time in the early 80s trying to go around the country and find the best of breed in the disciplines that I was looking to become educated in. And I paid a lot of money and spent a lot of time, as I said, with George Lane and Paul Tudor Jones and Richard Dennis. And many of those names might not mean anything to you unless you were a commodity trader in the early 80s. But I can tell you that those individuals' names were legends in the trading pits. These are people that are the best of the best at what they do. And what I started to learn, I was managing a very large institutional portfolio at the time, and I learned about this new technique called Fibonacci analysis for picking low-risk entry points and logical objective points to exit my trades. So I did a little homework. We didn't really have the internet at that time in history, and so what I had to do is ask a lot of questions and find out who was it that I could learn Fibonacci analysis from. And it was a major turning point in my life personally and in my career. And I found this gentleman who had been doing this for, at that time, about 15 years. And his name is often used in terms like the father of Fibonacci, the founder of Fibonacci trading. And it's a real treat for you to have a chance to sit with somebody that has been a trader for 30 years and the market knowledge that type of individual can bring to you. And I want to introduce you today to my personal friend and somebody that taught me a great deal about the markets, Joe DiNapoli. Thank you.
Thanks, Merrick. Merrick's my friend, personal friend. I really like Merrick. I'm not here because Merrick is my friend. Two reasons. One, I want to educate you. Second thing is, something's happening here which I think has the potential, not the certainty, the potential of being really important to all of my clients. Not just you guys, but all of my clients. Here's what it is. Let's assume that we can get a really good basis on technical analysis. I mean, something really, really good. Like what I'm going to show you. If we had this information when I was trading futures back in 1982, 1985, 1988, can you imagine? Now, some of us had the power, because of our connections and the quantity we traded, to have sort of special connections, special abilities in the S&P. But that wasn't available to most of my clients. And I can't tell you how frustrating it was for me. Since then, when I do private seminars, I spend an hour, 2 hours, 3 hours sometimes talking about what goes on in the pits, talking about order flow, et cetera, et cetera, et cetera. The advantage to what's happening today is that if you can use a really high quality technique, trading approach, technique like what I'm going to show you, if you can afford the software which helps you to implement that technique, AT Financial, let's say, and if you can get a window in the market, so many more of you will be successful. Now, why is that so important to me? Two reasons. How many of you have seen the movie Gladiator? Any of you seen it? Okay. When I was a little boy, and I used to watch those sandal movies, those Roman sandal movies on TV, I thought, wow, man, I'd love to be a gladiator. Wouldn't it be so cool, But it also occurred to me that if I was a gladiator trainer, it would be that much better, or at least as good. I'd like to do both, because here's these people trusting their lives to this gladiator trainer. Well, you guys, in a sense, are at least partially looking to me for your financial well-being. And, I mean, you're going to be gladiators out there in this world of online trading. And I take an awful lot of pride in seeing my clients succeed. It's very, very important to me. That's a personal reason. Selfish reason. Let's talk about selfish reasons, all right? How many times have you seen an advertisement in Stocks and Commodities magazine or Futures or anywhere else for that matter about Joe DiNapoli's trading approach or about Coast Investment Software? That's how many times. Who does our advertising? You do. Successful clients talk, get on the internet. They talk about the kind of results they're having. So it's selfish too, in a sense. We want you to be winners. We're going to do our best to make you winners. It's important we get on the same page because generally there's a lot of misconceptions. What was the Dow was down 300 points today? Is that right? Anybody want to give me a trend for the Dow? What is the trend of the Dow? Down?
Depends on the time frame.
Okay. You can't even say right now that the trend in the Dow is down because on a 5-minute chart it might be up. It may have turned around on a 5-minute chart. It may be having a retracement. The point being that if I ask you what is the trend in oil, what is the trend in Microsoft, what is the trend in the S&P, it is a senseless question because I have to say what is the trend given a time frame. What do I do? Well, it's simple. What you do is you define the time frame you're looking at and you define the trend for that time frame and that allows you to act. If you don't define the trend, just, write a check to your favorite market maker. Okay? Write a check to the floor, or better yet, a charity, because it's going to go. The next thing is leading and lagging indicators. Anybody want to give me a definition for a lagging indicator? I see we have an aggressive, knowledgeable group. I'm sorry? That is a type of lagging indicator. That's correct. But can you tell me maybe what a lagging indicator is in general? What did you say, sir? Something that just passed. All right, we're getting there. All right, the idea is that a lagging indicator more or less tells you what you should have done 2 days ago. Tells you what has been. We are now in a buy, we're now in a sell, whatever. Okay, how about a leading indicator? Somebody want to try that? Money flow. Now, you're giving me a type. Give me the definition of what a leading indicator is.
Where it's going.
Where it's going. That's... I'm sorry? A future trend. All right, we're getting close. Here is an explanation of what a leading indicator is. Market's falling. Down. Hey, the market's going down. But look, there's support down here. Ahead of time, you can predetermine a support level. That's what a leading indicator is all about. Here's how I trade in a nutshell. It's going to be based on this simple statement. I buy dips in an uptrend, sell out predetermined profits. I sell rallies in a downtrend and buy back at a predetermined profit. That is it. That's the whole game. Nothing more. Buy a dip in an uptrend, sell a rally in a downtrend. Now, in order to do that, what I do is I first decide, is the market going up or down? And after I figure that out, I then apply the Fibonacci work primarily. There's one other leading indicator called the oscillator predictor, but let's stick with Fibonacci work because we have a limited amount of time. I apply the Fibonacci work, and that tells me where the dip is. It also tells me where to place the stop. It also tells me where to get out of this thing. So it gives me a logical profit. So when I get in a trade, I know ahead of time where my stop is. I also know where my profit objective is. And having real profit objectives in the market is so incredibly important. I mean, I don't know, except for large money managers that I know, and even some of those have gone to predetermined profit objectives. I hardly know anybody that trades without a predetermined profit objective. Or they'll sit there and they'll watch order flow and they'll go, whoops, and they'll get out. All right. There's 3 categories, I think, that are really critical and really important for you guys to pay attention to make money in trading. First is management. You have to be able to manage your capital and yourself. The second is competent trend or directional analysis. Well, that's a mouthful. What do I mean by that? What I mean is the market going up or down? That's all. Is the market going up or down? The The third thing is the leading indicator work. And that's the very last thing you do. For those of you that have read my book or looked at it, you know, I'm known as a Fibonacci expert. I have that reputation. I speak around the world on the topic. I don't get to it until chapter 8. People buy the book, and I don't want them to start at chapter 8. I want them to start at chapter 1 and get the context for the trade. The context for the trade is where it's at. If you don't know whether the market's going up or down, or at least have a pretty good idea, trying to use Fibonacci work to figure that out is at best extremely difficult.
Hi guys.